What? Welcome, everyone. It's Angelo Robles, and as you could tell, I'm on the road away from my normal location because we have such an incredible guest today. Not only did I have to dress up, not only did I have to get my trustworthy cigar ready that will be lit up today, but I'm so excited about today. So today we're going to cover Trump's America versus China's century. And Dr. Doom himself picks the winner. I'm going to hold him to a high bar. And that would be the icon himself, Dr. Marc Faber, economist, editor, and publisher of the Gloom, Boom, and Doom Report. Mark, it's been over a year. How are you, my friend?
Everything is fine. Thank you very much. And
Excellent.
I mean, when you ask how are you and so forth, uh, everything is fine up to now. The future we don't know. And if anything, I think that asset markets have surprised some people by going up more than they expected, or going up instead of going down. And people who, in some cases, said gold never moves and silver never moves, and so they were surprised by the increase in prices last year and this year.
Very surprised. If they were in only the US dollar or treasuries, they lost out on some truly significant gains, including in the stock market. Since you brought that up, on that note, why don't we begin? Liberation Day was April 2nd. That was the day where Trump was going hardcore on trade wars and on tariffs. Markets don't like uncertainty. It reacted rather violently. Trump throws things out there, but then he does usually sometimes listen to Besant and others and adapts. So since then, the markets have actually done great. Does Trump actually know what he's doing? Or is the world in such utter chaos? Maybe he's the one eyed giant in the land of the blind.
Uh, I'm not sure he knows. He knows what he's doing. He's aware of what he's doing. I'm not sure that he's an accomplished economic observer that understands, say, the relationship between the cost of living increases and money printing or money supply, and deficits and tariffs and so on. That I'm not sure that he understands this. But as I hinted at before, my view is that I would have voted for him because he's much better than the alternatives. Now, it may not mean very much because the alternative was such a disaster. So uh, I, it doesn't take much to be better than, say, a candidate such as Kamala Harris.
Well, of
But
course, in my
but in
audience,
general, I'd say, you know, the overwhelming factor today for investors is liquidity. And the US, since 2022, has increased interest rates, as have the central banks. And they've cut them a little bit last fall in October. But in general, liquidity has actually expanded. This endless liquidity. And the symptom of this liquidity explosion is the excessive speculation in everything, in day options, in currency movements, in stock movements, and so forth. There's plenty of liquidity, except poor people have no liquidity. But the rich people, the people that participate in the stock market, plenty of liquidity.
I mean, Mark, there's so much to talk about. My audience knows I would love a 3 hour interview. We're limited to only about 56 more minutes. So there are some incredible things about trade imbalances, about tariffs that I may have liked to have gotten to, but unfortunately, after your brief opening salvo, we're going to have to leave that on the cutting room floor. But you did just bring up something there that I think is very important. When you look at the impact of printing money, when you look at the impact of the real cost of inflation, when you understand that even America, the world's richest country, the vast majority of people are one or two paychecks away from not being able to pay their bills. The only option, since the dollar has lost, what, 97% of its value over the last 100 years, the only option is investing in assets that appreciate. Historically, that has been stocks. We could definitely argue for gold. In today's world, perhaps Bitcoin and crypto, certainly real estate. None of that is any guarantee moving forward. But if you're not the top 20%, really the top 2 or 3%, participating by owning assets that go up in value ahead of the pace of what they're doing in what I would call money printing and inflation, you have no chance.
Well, my comment about this is the following. And this was observed already by Copernicus 400 years ago. So when you print money, the money does not lift all prices with the same intensity and in the same relationship. What happens is the money comes into the system. In our case, the money that is being printed or created comes in through the financial system, essentially Wall Street. That's why Wall Street will never, never argue for tight money. They want easy money. They want liquidity. That's their bread and butter business. Excessive liquidity. That's where they make the commissions from, and the underwriting fees and the asset markets, when they go up, the fees for fund managers go up because the money becomes bigger and bigger and bigger. So you can charge the clients more. And you get the performance fees. So Wall Street has an inherent interest in money printing. Now the money comes into the economy through the money printing process, and then the money can go, say, into coffee or into cocoa, or you can go into gold or silver or platinum, or you can go into stocks, but not every stock. The last 2 years or 3 years, the money went principally into the FANG and FANG-related stocks and semiconductors and AI-related stocks. But some other stocks that didn't move. It's like the money went principally into the American stock market, but emerging markets and Europe grossly underperformed until the turn of the year. From the turn of the year, 2024 to 25, European stocks have outperformed the US, and some emerging markets have been surprisingly strong. And this is the point I'd like to make. In this environment I described of money printing, where liquidity is plenty, the liquidity will flow for 3 months in this corner of the world. And then 3 months later, it flows here. And 3 months later, there, and so forth. And so you get a lot of volatility. And some groups of stocks suddenly go up, like Chinese stocks and Hong Kong shares have grossly outperformed over the last 6 months because they came off low levels and rebounded very strongly because they were inexpensive. And say Hong Kong real estate had tumbled a lot and became cheap, and stock valuations were very low in terms of price to book. So
And
you understand, for the smart operators, this environment is very favorable. But an ordinary American, an ordinary citizen who doesn't follow the money trail precisely, it's very difficult to make money.
of course, Mark,
But I have to say, when people, I think 70% of US households and probably 80% of European households, they are struggling because the cost of living have gone up more than their salaries and the taxes have gone up. So the cost of living is expensive. But in my case, I'm someone with liquidity. In my case, the situation has improved. 3 years ago, 4 years ago, I got less than 1% interest on the money. Now I get 4%.
or you could invest in gold the last couple of years and be getting 20% plus, Mark.
Yes, yes, of
And
course.
Bitcoin even more, and certainly the Mag
But
7. Mark,
I've been talking about gold for the last 40 years that that responsible people should own some precious metals because you cannot trust a government and you cannot trust central bankers.
and
So
Mark,
you must consider the consequences of the statement and say to yourself, what is actually true value in a monetary inflationary environment? And that are precious metals.
do you believe a wealthy individual or family should directly own gold and silver and perhaps other metals, besides keeping it in their home or in a bank, which technically there may be problems? Should they keep it even offshore in a more secure, diverse location?
You want me to get arrested? I think I
No
think
one would
yes.
ever arrest you, Mark. Come on.
I think you should diversify the holdings of your precious metals, which I suggest you hold in physical form.
Mhm.
So you should hold some in the US and maybe some in Australia and some in New Zealand and maybe some in Russia and some in China. So you understand? We don't know. We don't know how the world will look in 5 years' time. The politicians, they behave as if they would want to go to war. Ordinary people don't want to war. It's horrible. But we have in front of our eyes a war that doesn't make any sense at all. The Gaza Strip, this is a crazy idea, this war. Also, Ukraine, it's crazy. It's of no use to anyone. But the politicians, they want it.
Mark, you've been called, I would use the word prescient for predicting what I would say are crashes. Cutting to the chase a little bit, is America's century or last 100 years, or really since Bretton Woods, what, 1944? Is it over? And are we witnessing the birth of China's economic empire? Or are we calling for the end of the dollar way too quickly?
Sorry, I don't know. How are you sure about this? In general, for sure, in future, the dollar will be replaced.
By
It's
what,
now the
Mark?
reserve currency. But no reserve currency has survived for long. I mean, long, 200 years. But I think, to be fair, the Fed has printed money. There's no question about this. And we had significant cost of living increases. But say if I go to a supermarket in America and I buy goods, a basket of goods, and I lived in New York in 1970, 73, that period of time. If I buy the basket of goods today, then as in 1973 or 72, of course it will cost more. There's no question about this. But in my view, if you invested in the Dow Jones with dividends included, or you bought a house in America in the 70s, or you bought the S&P 500, or even treasury bonds with the interest accumulation, or you invested in gold at $35 an ounce, then gold has protected you very well. You understand? In 1970, you could buy gold at $35 an ounce, and now it's, what is it, 3,300, whatever. And so I think that there are ways to protect yourself, and you hinted at in a monetary printing environment, you need to own some assets. Now, the question is, at what price you buy these assets? Because if you bought 5 years ago commercial real estate in America, you're down big time, not a little. In some cases, 70%. Some buildings will be worthless because nobody's moving in. I have friends, they have offices in San Francisco, and they tell me the area is so dilapidated that nobody's moving in. You could do something about it by kicking out the homeless. But the government is usually not doing that. The government, the local people. But you could clean it up.
And I promised I wouldn't come back to it, but here I am. Trump claims making America great again. Part of it's going to be through tariffs and what I would maybe describe as isolationism. Now, you've studied economic history before. Hasn't every declining empire effectively tried that exact playbook, kind of before collapse?
I mean, I studied economics, and I also studied economic history and financial history. I was very interested in the subject. And in general, unless an interventionist is a genius, the best is not to do anything. You understand? An economy, the proven recipe is free markets and the capitalistic system. I'm not saying it's the ideal system, but it is superior to other systems because I've seen communist countries. I've been to these communist countries in the 1950s, 1960s, and it's a complete disaster. The planning economy does not work. Now, the problem with Trump is he's an interventionist who thinks he knows better. But he doesn't. He's largely in everything ignorant. To be fair to him, he's an incredible promoter. To think of it, how the first time he became president, all the Republicans were against him. This time around, half of the Republicans were in his favor, but lots were not. You're never going to get the Bush family to support Mr. Trump.
You know too much about US politics there, Mark.
No, I don't know much. But let's say I would have voted for him and I would vote for him again. But I think his policies are a disaster, a recipe to make Americans even poorer relative to the rest of the world. Say, you look at the wealth, the typical Chinese household in 1970, the typical American household in 1970, the typical household in China today is much, much better off than in 1970. That I can say without any restrictions. And the same applies to Indonesia and to Brazil and to India and Bangladesh and whatever. But in the Western world, I can't say that the typical household in Switzerland is better off nowadays than it was in the 70s. No, I think they're worse off. Same in America.
Mark.
The typical household. I'm not talking about what we touched upon, the 0.01%. The Jeff Bezos, the Musks, and so forth. These people, of course, are much wealthier than they were. Also, in my case, the conditions are good because I have no borrowings. So I have cash due to my business. So when interest rates go up, actually, I benefit. But I can tell you a lot of people are struggling. And I see it every day when I go out to bars or to hotel lobbies or whatever. The majority of people has had cost of living increases that are substantial and salaries that have not kept up with the cost of living increases.
And all of that will be more challenged with the rise of AI and likely at least short-term dystopia and loss of jobs due to AI. You mentioned
Who knows? Who
communism.
knows? But one thing is clear to me, that the policies of the Federal Reserve, especially after 1970, when they went off the gold standard in 71.
Mhm.
I remember it was August 71. And thereafter, the dollar declined sharply in value against the German mark and the yen and so forth, and against gold. In my view, this period, from the early 70s up to today, we had a period of high asset inflation. Asset inflation is when prices of real estate go up, of stocks, of collectibles, of wines, any asset goes up. Every inflation eventually comes to an end and turns into deflation. Every. Question is when.
Yeah, yes. And the
And
next question.
the debt has been growing excessively, and governments have been growing excessively. All this will come to an end one day, but we don't know exactly the circumstances under which it will come to an end. That we don't know yet.
Changing directions a little bit, but I do want to come back to that. Are the JGBs, Japanese government bond, signaling that something is about to break in Japan?
In my view, the conditions in Japan are very bad because the JGBs will probably go up more in yields. In other words, interest rates will continue to go up in Japan. And the government debt is such that it will likely become problematic
I don't want you to smoke a load,
In the
Mark. I got
sense,
my cigar.
yes, yes. I think that the problematic will be that all the tax revenues will be used to pay the interest on the government debt. All
All of it.
of it. In America, similar, not all of it, but the interest payments on the debt, in my view, in the long run will go up. They will try to lower it. That's why Trump is always arguing for lower interest rates. But in my view, under him, the debt will go up and the rate of inflation will go up.
Well, Mark, what will actually happen if the Fed cuts rates? Could the yield curve actually steepen?
Yes, of course.
And I'm not sure if you're following some of the recent acts that President Trump and the government has passed, but the Genius Act creates a gateway for the Fed, keeping the dollar all powerful as the world reserve currency to use stable coins, possibly at one time in the future, to monetize debt. Is that going to keep the Ponzi going? Or if China and Japan buy less treasuries, but stable coins like Tether, like USDC, buy trillions of dollars worth, that could keep the dollar, the world reserve currency, for a long time to come.
Yes, the dollar may remain a world currency, but it doesn't prevent this world currency to depreciate in terms of purchasing power. You understand? I could have the world currency and it's used, but its value goes down every year against precious metals or against real estate or against other currencies and so forth. So I would not invest necessarily in stable coins because it's tied to a currency. I prefer, first of all, I want to make one point clear. Unlike Mr. Trump and unlike politicians, I don't know how the world will look like in 5 years' time. I mean, I have friends who are well informed. They're convinced we're headed into World War III. Now, how the world will look like after World War III, I'm not sure. And I'm not sure I will be here to watch it. But these are things we don't know. Number two, I remember at Friends, they were the strategists at Merrill Lynch in the early 80s, and they were very famous for their reports warning about excessive debt growth and that inflation would accelerate and that the system was going to collapse. And here we are 40 years later and it's still existing. You understand? With money printing, you can keep the system going for a long time.
Indeed.
A long time. And, you know, you look, say you go to Turkey, or now the rate of inflation in Argentina is coming down. But before you went there and you walked around the shops and the restaurants and so forth, they were full. And yet you had very high inflation rates. Same in Turkey, because the economy then becomes kind of dollarized. So as long as you can print money, the system can last a very long time. And especially in a case where you have like the dollar, your reserve currency, and the others are run by central banks that print either the same quantity of money or even more than the US. So on a relative basis, your paper money is relatively better than others. Compare. The dollar has been strong over the last few years against the Canadian dollar, against the New Zealand dollar, against the Australian dollar, and.
Mark,
But
like I
it's not
always,
been strong against precious metals and not been
right.
strong against bitcoins.
But if something is going to replace the dollar, Mark, what is it going to be? The Singapore dollar is too small. The Norwegian krona, sure, it's interesting. The Swiss franc, the yuan, none of those. Is it going to be a basket of currencies backed by commodities?
The answer is again, I don't know. I suspect that in this period of not knowing, your best bet for financial survival and prudent financial survival is to own some precious metals, physical form, and to own it, as I said, in different locations, not all concentrated in the US.
What's your take on why are central banks buying so much gold?
Well, I don't think that the Western central banks are buying a lot of gold, but central banks in countries like Brazil, Russia, China, India, and so forth, they buy gold because the additional problem of the dollar as a reserve currency is countries, especially since we have Trump as a president, are becoming concerned or more concerned about the value of their investments in dollars. And can they access these dollar reserves? Now, we had example where the Americans froze assets of Afghanistan, of all countries, one of the poorest countries in the world. What do the Americans do? They go and seize the assets. They seized the assets of Russia. So if you're China and you have large dollar reserves, do you sleep well? No. So also I, as an individual, I have assets, I have dollar, but I keep my dollars outside the US. But in case I kept, say, $1 billion in America, I would be concerned that one day I can't remit the money out of the US, or that I can remit it outside the US, but with a huge tariff, with a huge tax.
Mhm.
It's a possibility they can do that.
Of course it is. And what do
They
you think
can
happened to the
do.
Russian oligarchs
And
with their assets in dollars and frozen?
I think the people are increasingly concerned about holding assets in the US, quite frankly.
Mark,
So the answer to your question is, as a prudent investor, you want to be diversified. You want to have some assets in Europe, some assets in China, Hong Kong, Singapore, maybe New Zealand, Latin America. I'm actually quite keen on Latin America because in Latin America, we have in front of our eyes an example of a leader who has reduced government spending.
that must be Javier Milei.
And I mean, he's done a wonderful job in Argentina. Now, I don't know about the future, but up to now, his policies have been very favorable for Argentina, for the economy, for the standards of people, of living of people, and for the country. But of
Mark, we
course,
haven't, the one part of the
the
world
people
you could,
that attend these conferences like Davos, the interventionists like Trump and Carney and Starmer in Britain and so forth, and Macron, These are all conceited interventionists. They think they know.
Mark, how come
And
you mention the United Arab Emirates or aspects of the Middle East?
well, the reason some of these countries have done relatively well is that they have people who run these countries with reasonable wisdom. I mean, I went to Dubai in the early 70s. The tallest building was a building of about 12 stories. And now it still exists. It's called the International Building. It's right at the entrance into Dubai when you drive from Abu Dhabi. But it's a midget among the buildings that are all around it. And the Sheikh Maktoum of the family of Dubai has done a fantastic job. But it's not the job of a democracy. It's the job of a leader with wisdom.
Mark, back a little bit to
But
commodity.
the Westerners, they don't want to tell you this story because they promote democracy, because they know that with democracies they can vote for themselves, money for themselves. They can enrich themselves.
What do you think about family offices, not just investing in gold and silver, but with the advent of AI, with the critical minerals, rare earths? I think of platinum, palladium. Are there ways for family offices to be more diversified in commodities? Should they do ETFs or have direct ownership?
They can buy Newmont Mining, they can buy Barrick, they can buy Max Silver, um, Majestic Silver, and so forth. There are lots of opportunities. They can buy oil stocks. The stock market has been rewarding for very few stocks in the last 3 years. The majority of stocks haven't done well, but because these stocks haven't done well, they're reasonably priced. I mentioned Hong Kong before. It was very cheap. Now it's gone up a lot, but it's still very low compared to what it was and compared to other markets. So I think there are plenty of opportunities.
Interesting.
Beverage stocks, talking about us, beverage stocks and tobacco stocks are still reasonably priced.
Yes. Uh, Taiwan, Mark, can be a flashpoint that everyone is watching. If China invades Taiwan during Trump's term, does America actually fight? Or do we discover perhaps the empire has no clothes?
Of course, they will fight, but the ability is questionable, and it will depend on how involved the US is in Europe and in Russia. Lots of things can happen. I'm telling you, you ask me questions which I cannot answer because I don't know what the situation will be at that time. If the US has to fight the war in the Middle East with Iran, if the Chinese decided to invade Taiwan, which I don't think that they would decide, I think they will keep the relationship as it is now. No change. But if the neocons, the Boltons of this world, and Trump being pushed by Netanyahu to do things, then they may provoke China. China has been extremely patient with the US up to now. But what about the future? Who knows?
Mark, China's state capitalism versus America's crony capitalism, which corrupt system ultimately proves more efficient in wealth creation and resource allocation?
Both will fail.
Hmm.
But true capitalism can survive, except, and this has been discussed. I mean, this is a very good book that I recommend to everyone. It's called Capitalism, Socialism, and Democracy by Schumpeter.
Excellent. We see it.
That is a book is actually not difficult to read, but it takes time because he's very deep. He pays a lot of attention to small details. But he describes, and he gave a speech shortly before he died. He died relatively young. He was a professor, I think, at Harvard. And he gave a speech in 1949 about this subject, how capitalism inevitably moved towards socialism, and explains the reason why it happens. It happens largely because of academics. They are jealous of the entrepreneur, the guy who starts a small business, has no education, and succeeds. So the intellectuals are driven to the left. They're all left wing. I mean, not all, but 95% of professors at universities are left wing, leaning to the left, not to the right. And he explains that, and he also says, if you are a successful entrepreneur, you became rich by having free markets and capitalistic, but then you're concerned about preservation of capital for your children and so forth. So you want more regulation by the government. And so they are in favor of regulation. And regulation keeps competition down. So that's the evolution. But I recommend people to read this book because it's very interesting that inevitably a free society, a free market, and the capitalistic system, like in the US, in the 19th century, government expenditures were practically non-existent. People kept what they earned. Then came the income tax and the Federal Reserve and so forth. We didn't have inflation in the 19th century. And government spending in America, federal government, in 1913, when the Fed was started or founded, was about 9% of GDP. Today, we're close to 45%, everything included. In France, we are 60%. These countries that cannot grow because the government is so big. The extreme case is, of course, the communist planning economy. Everything is the government, except the one thing that functions is the black market. The black market always functions.
Mark, if you had to put 100 million in either American or Chinese assets for the next decade, where does the smart money go?
Look, at the moment, Chinese stocks are inexpensive. I don't want to say American stocks are expensive because some stocks are not expensive in America, but the majority is relatively expensive. But some stocks are not expensive. And my view is not 100 million either China or either America. I have a diversified portfolio of real estate, stocks, equities, and real estate and cash and bonds and precious metals, about 25% each. And in different geographical locations. I mean, I have some European stocks, I have some Canadian stocks, I have some Australian stocks. I have very little in the US, some gold shares, American gold companies. But I have bonds in America.
Mark,
And
if you were
my major currency, the biggest currency exposure is in dollars,
yes.
but it's not as big as probably gold and silver.
And I know this goes back to a question I kind of asked earlier, but if forced to live under American chaos or Chinese control, like what's the better option? For me, being someone who creates independent wealth, is an American at heart and literally, American chaos, entrepreneurship, capitalism is the way to go. But maybe most people, I don't know, maybe 80% want someone to tell them what to do, wants a government to kind of take care of them.
This is the idea I mentioned to you about from capitalism to socialism. I doubt that people really want freedom. I think
I
it's
agree
like
with
you're
you.
saying. Most people, they like to be led. Someone takes the decision for them.
100%.
And that's why is most people work for a company. They are not entrepreneurs. I work for myself because I wanted to be free. But then we have to define freedom. I'm not entirely free because I have a family and I have employees, so I have to look after them. It's my duty in a way. So I'm not entirely free.
Mark, many decades ago, you elected to leave your birth home in Switzerland and broadly Europe and go to Asia. Why?
I mean, my dream, because I was a successful ski racer in Switzerland and many people knew me and many people knew my family and so forth. So life was relatively easy in Switzerland. And I had my relatives and this and that. Anyway, I always had the dream to go somewhere where I wouldn't know anybody and then work myself with my own initiative and so forth. So the opportunity after my studies, I joined White Wells. It's an investment bank that then became part of Merrill Lynch in America and part of Credit Suisse in Europe. And then I worked in their office in Hong Kong and developed business throughout Asia with wealthy people. And before I went to Asia, of course, we had to negotiate the terms because I was having a good business at the time already in Switzerland, mostly with institutions in the Netherlands. And then the company said to me, look, we send you for 3 weeks to Asia. And you can stay in Asia, in Hong Kong, Tokyo, where you will be working. And then you tell us whether you want to go there and live there, because we don't want you to go there for 1 year and then say you don't like it. We want you to go there for a long time. So I went for a day to Tokyo and for a day to Hong Kong and for 2 weeks to the beach in Pattaya in southern Thailand.
Of course.
It's the sex capital of the world. And then I said, yes, I like Asia. So that is the reason I came to Asia.
Excellent. And
But
Mark, we didn't
I
really,
want to say one thing.
please.
already as a child, I felt that the Western world, particularly Europe, was moving to the left, strongly to the left. And I felt that, especially when I saw Hong Kong, the wheeling and dealing atmosphere with no regulation to speak of. I remember Hong Kong, they had a stock market that was very active, and they opened a SEC. I mean, they call it SFC, like the SEC in America. They had one staff and one assistant. Yes. You understand? It was very free dealing. But that propelled Hong Kong into an incredible growth phase, because if in Asia, even today, you don't work, you have nothing. In Thailand, people don't need to work because there's plenty of food. But in the Philippines, in Hong Kong, Singapore, you don't work, you have nothing. There's no social security to speak of. So the incentive is for people to, tighten their belts when things go bad. And when the economy expands, then they can make money. And this is a completely different mentality. And of course, the socialists will tell you, yeah, we need more this and more that, and more social contributions in Thailand and in Indonesia and so forth. But I have serious question marks about this whole social network.
Well, Mark, maybe a little bit on that note, and if you don't want to talk about it, it's okay. Here in the US, in New York, and even in Minneapolis, St. Paul, but let's stick to New York City. We have a gentleman who's probably going to win the mayoral race. Now, again, it's the mayor of a big city. It's not a governor. It's not a president. He is a hardcore Mamdani socialist into a communist. It seems like more and more Americans that are younger, that are finding challenges with jobs, that are in debt from college loans, they want things for free. They want someone, any politician wants to get elected, to promise them the moon, as if the money, which is a mayor can't do, is printed from nothing. Is America beginning to become more chaotic, and are big cities going to fall under the precipice, for lack of a better word, of socialistic and communistic practices?
Well, I'm sorry to say that part of the reason why we have this move to the left is the unions, especially the teachers. They're all left. And the education is very left. And the immigration policies of America, it's actually interesting. The people who leave their countries, say, they leave Latin America, come to the US, or they leave Africa, they come to the US. They leave these countries because they have very corrupt governments, government officials that essentially steal a lot of the resources. Then these people come to the US, they don't adapt the US methods. No, they themselves become again socialists. You understand? And I think some cities like Chicago and San Francisco and Los Angeles and New York and Baltimore, they are being killed by this socialist left-wing tendency. Killed.
Mark, if that's the case in America, it's 10 times worse in Europe.
Yes, similar. But as I told you, the tragedy, say in Germany, is the rich people actually support the socialists. They support them.
Mark, does a country need to have a unifying morality a culture that people coming in must assimilate to, as opposed to the opposite that you describe.
This morality issue is very difficult to talk about because I may argue that I'm a moral person. But in some ways I'm moral, and in other ways I'm not moral. If you are a Muslim and you see me drinking beer and smoking, he may say you're not moral. The morality issue is very difficult to define. Were the people at the time of the Civil War in America more moral than they are today? I don't know. You tell me. These are issues that are very complex, and it's difficult to argue one way or the other.
Mark, I believe my
But
last.
I'm an economist, you understand? Of course, I'm interested in philosophies and this and that. And I like Schopenhauer as an example, but that other people that don't like it. And I like worldly philosophers. I like Schumpeter as an author, as an intellectual. He was an unpleasant character, but highly intelligent. We have highly unpleasant people nowadays in politics that are ignorant. But
Indeed.
what I want to say is there are things, of course, because I write reports, I'm interested in everything that comes across my desk. But at the end of the thought process, I must come to a conclusion. Do I buy stock A or stock B, country A or country B, gold or silver? Or you understand? I must make choices. I'm free. But these choices in the current environment are very difficult. I don't think that we will make a lot of money in the next few years, but we may be lucky. I started to play pool, snooker. The game is a highly skilled game, but maybe 20% is luck. You can win against a very good player if you're lucky. Of course, over the whole evening, you're not going to be lucky all the time. But one game is possible to beat a very good player if you're lucky, and he has bad luck.
Yes, in the short term, luck is
Yes,
more likely to
so
play.
I'm just saying, I find the current environment not very conducive to make a lot of money, but I'm eager not to lose a lot of money. Never mind making money, just I don't want to lose too much.
Mark, we don't have time to get into AI, but indirectly, as part of AI, is the build out of data centers, of infrastructure, commodities, electrical components. And the one thing we didn't talk about, the massive need for energy. Would you say that moving forward in the next 5 or 10 years, that energy stocks and opportunities could be a valuable play for family offices?
I think that energy stocks are incredibly low. Resource companies are incredibly low. You look at Vale in Brazil, or you look at Rio Tinto, or BHP, or Newmont Mining, all these or Barrick, all these companies, in my view, they represent good value. That's why when I said the stock market in America is expensive, I classified it. I said some stocks are expensive, but lots of stocks are not. So yes, I would own some energy stocks. I would own some resource stocks. I
And
would be diversified. And now, in order to diversify my business, I need to leave you.
you have to, Mark, for those that would like to subscribe to your services and learn more, how could they reach out to you, your team, and subscribe to your services?
They can go to my website, gloomboomdoom.com. Thank you.
That is wonderful. Mark, you're
It's
always an
all in
incredible
one
guest.
word, gloomboomdoom.com. But I just want to say, investing is always difficult and the future is not known. That we don't know. And many things can happen. I would be erring, I would make on the mistake on being cautious rather than use the current environment overly aggressively.
Of course. Mark, I appreciate you, your time. You're very generous. It's always great to have you on. Everyone, I'm Angelo Robles, Family Office, founder of Family Office Association, sold, creator of a private wealth and strategy community for family offices called SFO Continuity. And many of you could follow me on @FamilyOffice or reach out to me at angelorobles.com. Mark, thank you for your time today.
It's my pleasure. Thank you very much.
Thank you. Bye-bye.
What the crap?
Indeed.